Hey everyone, it's Louisa here, and I hope everyone had a great day today. I want to review a trade I took this afternoon. The strategy was Unicorn. It's one of the trades. It's one of the strategies that I use, and because I trade reversals, it's one of the strategies that I use. Anyway, so this morning I had taken two trades that were negative trades. They were not good trades. I rushed, and so I wasn't really feeling great about the day. I try not to trade the afternoons, but anyway, I saw this trade setting up, and it worked out really nicely, so I want to just kind of review it with you guys. This is a 1 minute chart. This is on NQ. We can see here that price was moving up and went into some consolidation here and then continued to move up. This red line here is my buy side that I had on my chart from last night. It's just an area of interest for me. So as price was moving up towards this area of interest, we had this breaker block start to form, and this is a bearish breaker block, so I'll just put that in here. These breaker blocks form quite frequently throughout the week, and I just find this to be a great setup. It's a high probability trade, and I've been trading this for, I guess, a little over a year. So we've got a high, we've got a low, we've got a higher high, we've got a lower low. Now at the time that I was watching this, I was on the 5 minute time frame, and so because I was on the higher time frame, this entry here I missed. Had I been on the 1 minute time frame, I probably would have seen it, but this is where I would have entered had I been on the 1 minute time frame, and I probably would have taken the trade down to here. Anyway, because I was on the 5 minute, I didn't see it. So I followed price down, and price came into my 5 minute fair value gap, or BISI. It immediately retraced back up into my bearish breaker block. What made this trade more high probability is the fact that there were two fair value gaps. There was this SIBI, so between here and here, and then let me just put the other one in. The other one was here. So when we have fair value gaps on opposing side legs, we have what's called a balanced price range. That makes for a very high probability trade. So very patiently I waited for price to come up as far as possible. It actually went past and through this SIBI here, and so I'm always mindful with these trades that the stop loss isn't too wide apart. So I like to wait and watch price come up as far into discount as possible. I like to buy deep into discount and then sell in premium. So at 22,248, that was the price I entered this trade, and I took it all the way down to 22,205. So if we were to take our fib here, and I think my stop loss, what's great about these trades is the stop loss doesn't have to be very high. It literally just has to be above the highest wick. So the risk to reward on this trade was about 8 risk to reward. It was 43 points. And I took one mini contract, and I think that was about I think it was $860 profit, which is okay for an afternoon trade. Anyway, it helped to mitigate my loss from this morning. So anyway, overall, I was pretty happy with that. You notice that when price came back down, it moved down further through the fair value gap, right down to the bottom. I thought the price may continue to drop, but it didn't. So as soon as this BISI showed signs of supporting price and it began to move up, that's when I exited the trade. So anyway, this was a very nice trade using a bearish breaker block, and it's called the unicorn. And when you have two fair value gaps on either leg, opposing legs, it just makes for a higher probability trade as per ICT. So anyway, that's what I wanted to share with you guys. I hope everyone had a great day, and I will see you guys tomorrow. Bye for now.